Hey traders, checking into the stock market today. We're going to talk a lot about Tesla. There's some very notable weakness in Tesla. Certainly a lot going on there, a lot of volatility. But first, the S&P 500. So overnight, we had information out of the Bank of Japan that they're going to be shifting their yield curve cap that they've had, and that led to a futures dump and then a bit of a V-shaped bounce. So we headed into the morning looking at this futures inverse head and shoulders on the hourly time frame. And I had a bit of a bull lean on the morning, just anticipating a daily bounce to get going because of how extreme this drop has been over the last 5 days. In the video yesterday, it was titled something about, are we about to see a bounce? So just knowing that things were extreme enough to at least see bulls make an attempt at a daily bounce. And so we got the hourly inverse head and shoulder confirming on both the NASDAQ and the S&P 500. And then we stalled out a little bit and ended the day with a tightening range where you've got your low, high, higher, low, double top, higher, low. And so essentially just a tightening range. And that leaves us with a little bit of uncertainty as to whether or not, as to whether or not the bulls are going to be able to follow through on this bounce. And if we're looking at it from SPY perspective, we need to see the bulls break the high of today, tomorrow to confirm the hourly uptrend and to get this daily bounce going. Keeping in mind, we will be scouting a daily lower high to be the result of this bounce. We will be watching the retracement size to see whether it's a bear flag or whether it's a 50% plus. Pretty much the bulls would have to put together, 3 green days in a row to try and see 50% retracement to try and shift this momentum. So first things first, have to confirm the hourly uptrend tomorrow to get this daily bounce underway. We can clearly say that today was the strongest day for the bulls in the last 4 or 5 days since the CPI reaction, but that's not enough. We have to see the bulls prove it tomorrow with follow through. QQQ, same thing. It just ended the day with an hourly equilibrium where we had our low of the day, high of the day, higher low, lower high. So tightening hourly range. If it breaks bull, we zoom out, we scout the daily lower high to be the result of that bounce. We know bears are patiently waiting for that daily lower high. I'm one of them. I'm going to be watching for potential swing entries, scouting that daily lower high. But again, the burden of proof is still on the bulls, and they must break the high of today, tomorrow. Simple statement, if SPY and QQQ do not break the high of today, tomorrow, then it's a failure, and the bears continue to keep their complete control. The dollar, weakness, that's pretty much my takeaway from the Bank of Japan news overnight, is potential further downward pressure on the dollar. So yet another rejection from daily EMA 12, our picture perfect guide. People ask me, why do you like EMA 12? Show you this chart. 1, 2, 3, 4, now 5 rejections. We're testing the low. We have not broken the low yet, but still full bear control and new lower high level 104.93. And so with this weakness, the metal bulls are pleased, very pleased, because the metal bulls are holding on well, looking for the metals to potentially roll over into weakness. Talked about that in the video yesterday. But with this rejection from the dollar, it's essentially telling the metals, not yet, you're still holding on just fine because the dollar is still weak. So can't have any confidence in a metal pullback as long as the dollar is in this downtrend. So let's talk Tesla. So I don't know what the deal is with Elon Musk's dark period as to when he can sell shares or not. Some people say he's in a dark period now. If you know, let me know, please. But this is the kind of action where last week we were able to say, it looks like Elon Musk is selling, and then the news came out that he was selling. The reason that we could see that and speculate that that was happening is the magnitude, number one, the volume, but the magnitude of divergence between SPY and QQQ. There were days where SPY and QQQ were green and Tesla was down 6%. And that's what we had again today. Keep in mind, Tesla is, I forget exactly what, but it's something like the 4th and 6th largest holding. It's in the top 10 for SPY and QQQ. And if SPY and QQQ are going up and Tesla is not just red by a little bit, but in free fall red, that is a massive amount of shares to offset bots and algos and correlation trading that is going on. And so this is either a fund being liquidated or Musk selling, something along those lines. This is not tax loss selling. This is not someone getting rid of a 5-figure, 6-figure position. This is 7, 8 figure positions that are exiting to put this kind of downward pressure. Just talking dollar volume, I mean, what's 156 times 140? 156 million times $140, and the dollar volume 1, 2, 3, 1, 2, 3, 1, 2, 3. So $22 billion traded today. Again, that's not retail. So we're in free fall. We are a falling knife. There is a gap to fill that we've missed filling by a couple of pennies right here at 137.48. We've got a little bit of support in the 132s, and then we're looking down at 126. But previous support levels aren't going to do a whole lot here. You're going to have to see a volume climax shape up a bottom. And again, this is the kind of scenario where if you're trying to play this bottom and scaling in, it's crushing you. This is not the market environment to scale into weakness looking to play a bounce. If you're going to be looking to play a bounce, you have to have a level that you're playing off of. And so one thing to note is we've only seen one gap down in the last 7 days. Or more than that. But in the last 7 days, we've seen one gap down, and that's the only green day that we've seen. So I'm looking for a gap down to mark a temporary bottom, but just keep in mind that, we could gap down tomorrow. Let's say we open at 136, and then we see a bounce of 2%, 5%. We are just looking for an hourly lower high, and bears will continue shorting hourly lower highs as long as it keeps working. We had that mini short squeeze yesterday, mini the key word, but it just topped out, and that was that. No follow through from there. So the easy guide is if we're not confirming an hourly uptrend, there's no bottom. So that has to happen. But for the really aggressive bulls, if we gap down, the kind of scenario would be wait for the gap down, look for a low to be hit, and then if, in the first 3 minutes, if we hit a little low and then hit a new high of the day, if you enter, you're playing off that low. You can give a little bit of wiggle room, but if that low breaks, you're wrong. That's not the bottom to lead to an hourly bounce. And you need to get out so you don't end up... Someone tried to play a bounce today, and they're now down 5% on their position when they were only thinking that they were risking 1%. So just do not be that person, because again, this market environment is extremely unfavorable for playing these kinds of bounces. For me to get interested, I may be interested in a gap down bounce attempt for an hourly bounce, but I want to see the weekly RSI get oversold, and I want to see the daily oversold, which it is, 4-hour, hourly. I want everything as crushed as possible if I'm going to be looking for a bounce, which we could get there on a gap down open. But again, just be real picky. And again, we're not going to miss this bottom in the sense that you can bounce 10%, 20%, and just... I mean, how much can we bounce before we touch daily EMA 12, which is not even close to the daily lower high? We can bounce 15% before we get to that resistance level. So just if you're looking long term, it's not going to run away without you. It's going to be a while to find a bottoming process unless there's some kind of news catalyst to squeeze shorts. But other than that, this is now bear feast. And obviously you're not looking to enter short now. At the minimum, you'd be waiting for an hourly bounce to be scouting an hourly lower high. Maybe you're using 5-minute overbought conditions to be scouting that hourly lower high. You can see the best time to short was the last time the 5-minute RSI got over 70. And on that note, US Cannabis, MSOS, still in free fall, still all-time lows. Morning bounce, look at where we topped out. 5-minute RSI right at 70, best short entry opportunity. And from that point, we dropped 10% on the day. So we are in a market environment where bears are utilizing RSI for reverse backburners to look for bearish entries. And Cannabis is still all bears. And the next time MSOS bounces, we've got a resistance at 726. And again, it's free fall. It's a falling knife just like Tesla at the moment. Other names that were free falling, Amazon, putting a little bit of a stop to that weakness from the last few days. We did break the low of yesterday, but no follow through. It tried to stand out as a lead bull this morning, but ended up just with the hourly equilibrium like the NASDAQ. And Apple started the morning all bear, trying for the bullish reversal candle, but that fear low of 128's coming into play here. And again, every major general that hits a new fear low increases probabilities that the broader market will follow. Tesla, Amazon already there. Apple perhaps following along. So that's going to be key to be watching as well. NVDA testing support of 156.67. Still holding that level at the moment. And again, if we get a daily bounce, bears will be scouting a daily lower high for a potential head and shoulders pattern to try and shape up. We're going to be watching Netflix for a daily lower high. Netflix had a gap down on bad news. Bulls bought that gap down. It was just something to do with their advertising. Their new advertising tier is not very popular. But I'm going to be watching for a potential weekly rising wedge on Netflix. Maybe a weekly head and shoulders, depending on how this bounce shapes up if we do get a bounce into next week. Essentially, if we go to the 2-day time frame and condense it down, it would be something like this to finally roll over into a monthly lower high, rejecting from EMA 12. That's what we're watching for, bigger picture. So now on to our sectors. The financial sector, daily, again, trying to get a bounce going, trying to be the leader. We did break the high of yesterday, but there's also a double top at 33.78 and 33.80 from Friday's trading, which we are unable to break at this point. Have to clear that for any daily bounce follow through. XLV, also trying to get the daily bounce, shaping up. Again, still work to do. The bear descent is slowing. Bears are getting a little bit tired. Another one of the reasons I'm looking for this daily bounce. So we've got the information that bears are tired. Can bulls do anything with that? Have to break highs of today, tomorrow for everybody. We did see a period today where all major sectors were at the high of the day at the same time, which is obviously a notable shift from what we've seen over the last week of trading. And so we have to see that again tomorrow for bulls to try and convince that a daily bounce is indeed underway. Biotech sector had a great bounce off support today. Again, the 2-day equilibrium that we keep watching, tightening range, and we tested support today by 10 cents. First thing, and bulls defended it very well. So again, if you're going to be looking bullish in this weak market environment, got to be playing off a level. And this was a nice example of holding by 10 cents, 5-minute uptrend confirming, and then very notable follow through. I was playing the biotech sector in both directions today, but that's a 3% bounce and those leveraged ETFs going closer to 9%. But one lesson that I took away from the biotech sector today was I know that I'm scouting an hourly lower high in the biotech sector because anything under 82.25 is an hourly lower high on the morning bounce. But there was relative strength. And the relative strength, if you look here from this period of 10:20 a.m. to 10 to 11:25, pretty much an hour. So if we look at the S&P 500 during that time, this is what was happening. It's a very different pullback. So here's 10:20 and here's 11:25. So during that period, again, I don't even have to measure. It's clearly weaker, right? S&P 500, clearly weaker than the biotech sector. So we have relative strength in the biotech sector. So I recognize that, and we were talking in the chat room in one of the threads, and I said, I want to long it here for the relative strength, but the fact that I know an hourly lower high is the most likely scenario is keeping me hesitant. And obviously it would have worked out if I had longed. I was talking pretty much right around here is when I was looking at that potential entry. And so for me, it's correlation more important than bigger picture time frame most likely scenario. Because we could still see another 1% move up and still see an hourly lower high. So that was a little takeaway lesson for me on a missed trade. Other than that, didn't really have a whole lot of trading going on today. I was scouting a Netflix short, and I was a little bit distracted with the meeting and things like that. I did get it eventually at the end here, but look how many top fishing chances there were. I was trying to short it. I wanted to see this as a rising wedge because this new bull break over the high of the day lacked follow through. And so what I wanted here was one little 5-minute lower high to give me that top fish. And I was patiently waiting for that trade to come to me. And you can see we never got that 5-minute bounce until down here. And at that point, it was too late for me to want that trade. I wanted this green candle right here to lead to that bounce. And that's just an example of setting a clear criteria of this setup has to happen if I'm going to take this trade, and it didn't, so I didn't take the trade. And I just have to watch it go without me, and that's just the way that it goes. But a lot of tops on Netflix at this range. We'll keep an eye on that resistance level tomorrow to see if bulls are able to break it. We do all our major sectors. IWM, trying to get the daily bounce going. Same story as everybody else. Have to break the high of today, tomorrow to try and get some follow through. And then we just scout the daily lower highs. So again, the approach into the morning was pump the brakes as a bear. We know daily bounces are due. That doesn't mean I have to be an aggressive bull, but it means I'm a less aggressive bear. And so patient bears are waiting for those daily lower highs. Silver and gold, again, responding very well to the dollar rejecting from daily EMA 12 as silver holds daily EMA 12. And we're up testing the high right now. We broke it, no follow through. So if we have a red day tomorrow, it is going to keep the potential rising wedge alive, which we'll be keeping an eye on. But again, no confidence short metals if the dollar has daily EMA 12 resistance. Gold is right there testing the high as well. And the miners, notable bull day, but still well off their highs. So we're keeping an eye out for the potential that miners form a daily lower high here. And if I'm looking bearish on the miners, I would love to see, one more green day to scout that lower high. Then the dollar breaks EMA resistance. Then the metals pull back into more convincing weekly consolidation. But again, it's all the dollar. The dollar is dictating everything about the metals and miners, in my opinion, in the short term. And so if the dollar drops to lower lows tomorrow, that's giving the metals bulls a bit of continued confidence. Oil, still sideways, still trying to confirm the daily trend change. Inventory report tomorrow may have an impact. Will have an impact, but that might be the deciding factor whether we confirm it or not. And natural gas still all bears. Free falling back towards support of 5086. There is a potential play off of that. And weak bounce today. Hourly RSI was crushed, and we just traded sideways rather than getting any kind of meaningful bounce going. And so there is a potential bottom fish off of 5086, especially if we see another leg down from here to get to that level. But this is a win for the bears to retrace this much, because even if support holds, we now have a whole bunch of space for yet another lower high to be the result of that next bounce. Energy sector stood out as a bull today, slightly, and just holding support, which makes it stand out comparative to most ETFs, which are not holding support from last week. So if oil confirms a daily uptrend, then we'll look for energy sector to head up towards 87.36 resistance. So that's where we stand. Still in cruise control, very slow, low key into the end of the year, waiting for that fresh, clean slate, waiting for futures trading to play around with that. I'm going to be using TDA. I already downloaded it. I'm applying for margin, applying for futures, connecting my bank account, doing all that stuff. So getting that out of the way to be ready to go into the new year. I'm not going to be day trading every single day. I might be taking it a swing trading perspective to start. But again, I'm just looking, for the first month or so to trade with a small stack and look to get comfortable with the new interface. And, I got to get used to the math. I got to get used to the math of how much, two contracts moves in dollar terms. Because I have a stock trained brain where I can do the math where I've got this many shares and a dollar move on the stock is this much and my stop loss. That's all in my mind, and it's going to take some rewiring and observing how the contract move impacts the dollar move for me to get synced up on this new style of trading. And it took me a little while with options to do that as well for the same reason. So, looking forward to that adventure. Speaking of adventure, back to adventure time, chapter 2. Appreciate you watching. Do good things. We will see you tomorrow. Picking up on chapter 2 of the road trip adventure, last we left off was just starting off in Smoky Mountain National Park, North Carolina. Camped there for a few days, ended up going westward through Kentucky on my way towards Colorado out west, and encountered this nice box turtle guy. And he had some really cool patterns on his back. But what I loved about being able to travel on my own in terms of, choosing the days that I travel is picking when I go to places on weekdays, because there's way less people out there on weekdays. And in Kentucky here, this was the first time I really got to be by myself, because the national park in North Carolina still had a lot of people there. So after about a week on the road, this was my first time being completely alone. And the best part about traveling and road tripping is your agenda is literally, I want to see cool things and I want to get from point A to point B. So the only things you need to worry about are obviously for your safety, but what am I going to eat today? What do I have to carry with me? Where am I going to nap? And make sure you have your tent set up before dark. That's pretty much it. So you have tons of time to just explore and, oh, that looks cool over there. I'm going to go, check that spot out, or I'm going to climb those rocks, or it's just complete freedom, which is really empowering. But got to this spot and again, nobody else around. So just got naked. And the first time I could rinse off dirt and sweat from a week on the road. And what I love the most about road tripping, and why I think everybody should, practice or do it in some degree, is how much we take things for granted as human beings. And I do it as well. Everybody does it. But the kind of things where a shower, if you're showering every day or every other day, it's just this routine, it's this habit, and you got to do it. If you're showering once a week or once every 2 weeks, it's the greatest thing that's ever happened to you. And it's so enjoyable. And it just would blow my mind as I was sitting there that you turn a knob and hot water comes out of the wall. And thinking about 99.9% of every human that's ever lived did not have that capability. And the ones that did were reserved for royalty. And here we are, and any average Joe can have 2 places in their house where they turn something, or more than that if you include sinks. You turn a knob and hot water on demand. It's astounding. And even just things such as, a hot meal, or there's so many things where you're road tripping and you're roughing it and you're sleeping in a bed becomes the greatest thing ever. And it just makes you so much more appreciative of those things when you do have them after not having them for a while. So I ended up hanging out here, swimming in the creek, found a nice rock to nap on. And when I woke up, there were a bunch of buzzards circling above me and they thought I was a naked dead guy. Fortunately, that was not the case. So a bunch of lush nature in Kentucky as well. And these spots reminded me, I actually didn't put these up, I came across them, but they reminded me of Andy Goldsworthy. And if you're not familiar with Andy Goldsworthy, he's a really, really cool natural artist. He goes out in nature and he does these things. This is his documentary, Leaning into the Wind, but his rock structures, and he makes things out of twigs and leaves and icicles, and the way he manipulates the natural environment, knowing that it's only temporary, the vast majority of his art pieces, is just really cool. Look up Andy Goldsworthy and check out some of the stuff that he does. So that reminded me of a lot of his work in terms of stone stacking. Found a cool feather, was hanging out with Ringo on the trip, keeping me company. That was a spot where I camped got under that overhang, and any rainstorms that came through, I was completely protected and able to have a fire under there. And there were some cool waterfalls nearby as well. And I actually ended up getting a little bit lost in terms of not being able to find my destination of where I was going to camp here. But again, it's the kind of thing where there's nobody around and you just pick a clear spot and to say, well, I'm going to sleep here tonight and then we'll see what tomorrow brings. And what really was another big adjustment was time. So when you're in a routine and you go to work, or, you have your routine in daily life, time flies by because it's the same monotonous stuff that you do consistently. And I'm in that space right now. And that's been some of the biggest shifts in my life in the last 5 years, going from every single day being something completely new and foreign and things you're not expecting to see. I know I'm going to Mammoth Cave National Park, but I have no idea what it looks like. I've never been there. And it's just all new and exciting and fresh. And time slows down so much where every single day is so distinctly different than the day before it and the day after it, as opposed to when you're in a routine like I am right now doing the TheChartGuys stuff and doing stocks. I wake up, I have my routine, and that makes the days kind of blend together a little bit. So if you are trying to make things slow down and stop and smell the roses, the more new experiences and the more new stimuli that you can give your senses, the more that's going to happen. And time is very subjective, in my opinion. They've done studies where you take old people and young people and they say, all right, time a minute in your head. And consistently, for older people, they are early. And so that means time, the perception of time means it goes by faster. and the younger people are consistently later, meaning time is perceived slower. So I don't really understand what time is, but I do know that you can manipulate it in certain ways in terms of how it affects your life. So we'll head on to chapter 3, and that's going to continue heading westward through Kentucky to Mammoth Cave National Park, another cool spot. And we'll check in then. I hope you all continue to do good things out there. Have a great day, and we'll see you tomorrow.